What if I told you that everything you know about Warren Buffett's portfolio is a distraction, a $150 billion distraction? While the world was obsessed with Apple, Buffett was executing a completely different plan. He's poured over $20 billion into a single controversial stock. So big and so contrarian that it could define his legacy. This isn't just another investment. This is a message, and today we're decoding it. You know, I don't get many calls asking me about the next big thing. Most people who have listened over the years understand that's not our game. Our game is finding wonderful businesses at a fair price, not fair businesses at a wonderful price. We look for castles with unbreachable moats. Now everyone sees our largest holding, a magnificent company we love, Apple. But a castle's size doesn't make its moat deeper, and in looking toward 2025 and beyond, there's one holding in our portfolio that I believe exemplifies our principles perfectly. It's not the flashiest, but it might just be one of the sturdiest. It's the stock I'd back up the truck on if prices got even more attractive. Now I can see you leaning in. You're thinking, what's the secret, Warren? What's the ticker symbol? Well, the secret is there's no secret. The answer is in our annual letter, plain as day. We've owned it for years. We've added to it quietly. It's not a new, speculative tech stock. It's about as old economy as you can get. It's a business that powers the world, literally. Think about what this country runs on. It's not just oil or data. It's constant, reliable, unimaginably vast movement. The rails, the highways, the ports. This company is the backbone of American commerce. It's the toll bridge on the entire economy. That's right, I'm not talking about a stock we own. I'm talking about a business we own, lock, stock, and barrel. I'm talking about Berkshire Hathaway itself, and the crown jewel within it that doesn't get enough attention, BNSF Railway. Why is this my number one idea? It's simple. You can't tick-tock a freight car full of coal, wheat, or your new refrigerator across the country. There is no disruption coming for the railroad. The moat isn't just wide. It's a geographic and economic impossibility to replicate. The land, the rights of way. Permits. You couldn't build it today if you had all the money in the world. In an inflationary world, this is a priceless asset. It becomes more valuable, and as the economy grows, BNSF grows with it. It's the ultimate bet on America itself, and it throws off massive amounts of cash. Cash we use to buy more wonderful businesses. You're not buying a stock. You're buying a piece of this machine. So, for 2025, while everyone is chasing the next AI story or the hot IPO, I'd encourage you to think differently. Look for the businesses that will still be here, doing exactly what they do today in 10, 20, 50 years. Buy a share of Berkshire and you get BNSF, you get Geico, you get a piece of Apple, and you get a collection of other fantastic businesses, all bought at a sensible price by my partner, Charlie, and me. It's the one decision stock. You buy it, you forget about it, and you get richer slowly. And as I've always said, the stock market is a device for transferring money from the active to the patient. Thank you. It's not Apple. Is a powerful opening that grabs attention. The toll bridge analogy. This is a classic Buffettism. Frame the investment not as a bet on a product, but as a bet on an essential, unavoidable function of the economy. It makes the thesis easy to understand and visually represent show trains, trucks, ships moving goods. The impossibility of replication. Emphasize that the competitive advantage moat is not just better management or tech, but a physical and regulatory barrier that cannot be built today. This speaks directly to the buy it for life Buffett philosophy. Inflation as a tailwind. Briefly touch on how owning hard, strategic assets is a classic hedge against inflation. This makes the ideal feel timely and smart, not just old-fashioned. The patient conclusion End by bringing it back to the core Buffett principle of patience and long-term compounding. Most folks tuning in are expecting a name they've never heard before. Some tiny stock that's about to take off. That's not how we operate around here. The goal has never been to be the smartest person in the room with a secret formula. The goal is to be the most rational, to make decisions that are obvious in hindsight but require patience up front. We'd much rather step up to a pitch we've seen 1,000 times and know we can hit than swing at a curveball in the dark. You see, the real secrets aren't hidden in plain sight because they're camouflaged. They're hidden because they're boring. They lack the sizzle that gets people excited around the water cooler. On a Monday morning, people's eyes glaze over when you start talking about the fundamental, unsexy plumbing of the economy. But that's precisely where the durable fortunes are built, not in the fleeting trends that come and go. So if you're looking for a story about some new technology that's going to change the world in ways we can't yet imagine, you've come to the wrong place. We prefer to invest in things that changed the world 100 years ago and whose fundamental importance hasn't budged an inch since then. The real innovation is in the business model, not the product. The trick is to ignore the constant chatter and the noise of the market and focus solely on the few simple truths that actually matter over the long haul. It's about differentiating between what is fleeting and what is permanent, between what is popular and what is powerful. The most profitable opportunities are often the ones everyone is already looking at, but have decided aren't interesting enough. Think about the most profitable business in history. It's not making a better product. It's owning the only road into town. It's the enterprise that has to be used, day in and day out, regardless of who is selling what or what the economy is doing. Every shipment of grain, every new car, every container of goods from overseas has to cross that bridge, and a fee is collected every single time. That's the beauty of a truly essential business. You don't have to worry about whether consumers will like the new model this year or if a competitor has a slightly better feature. The demand for movement is absolute and non-negotiable for a modern society. It's a constant, relentless flow of commerce, and owning a critical piece of that infrastructure is like having a license to print money. Economics are wonderful because the cost of building a second, competing bridge is prohibitive. It doesn't make any sense. So you're not just owning a company, you're owning a natural monopoly, a wide, moat enterprise that is protected by the sheer lunacy of anyone trying to replicate it. The value of that position compounds year after year through recessions and booms. The cash generated from this toll bridge is phenomenal. It's not paper profits. It's cash that flows into the coffers every quarter, money that can then be reinvested or used to buy other wonderful businesses. This isn't a speculative asset. It's a wealth-generating machine that is tied directly to the heartbeat of the economy itself. You're buying a share of the national circulatory system. Anyone with a bright idea and some venture capital can start a software company in a garage, but try to build a new transcontinental railroad from scratch. Go ahead. The land isn't available, the permits would take decades, and the cost would be so astronomical that the numbers would never, ever work out. That's not a moat, that's an ocean. This is the kind of advantage we look for. A barrier to competition that is permanent and structural, not based on being a little better or a little cheaper for a few quarters. It's an advantage that was built over a century, and it's an asset that is utterly irreplaceable. You can't wish it into existence, and you can't disrupt it with an app. This means the business is immune to the kind of competition that bleeds other industries dry. They don't have to spend sleepless nights worrying about a new entrant undercutting their price because the entry fee is 1 billion times the price of admission. The game has been over for a long time, and the winner owns the field, the stands, and the parking lot. That kind of security allows management to think in terms of decades, not quarters. They can invest in making the operation more efficient and resilient, knowing that the payoff will come down the road. They are stewards of a national asset, and that perspective changes everything about how the business is run. It's the difference between renting an apartment and owning the land the city is built on. A lot of businesses fear inflation. It raises their costs, squeezes their margins, and makes their customers nervous. But if you own the railroad, inflation is your friend. Why? Because the replacement cost of every mile of track, every locomotive, every right-of-way goes straight up, making the value of the asset you already own that much greater. Think about it. If you tried to rebuild this network today, the bill would be multiples of what the entire company is valued at on the stock market. The stock price might bounce around day to day, but the intrinsic value of that physical asset base is being pushed higher and higher by the very monetary forces that are hurting other enterprises. It's a giant rock of value in an inflationary. See, furthermore, the pricing power is extraordinary. When the cost of everything else is going up, the cost of moving goods reliably becomes more valuable, not less. You can adjust prices to not only keep up with inflation, but to stay ahead of it, protecting and even expanding your profit margins. The service is so essential that the demand is what economists call inelastic. This creates a beautiful dynamic. You have an asset that is appreciating in real value due to forces outside your control, and you have the ability to raise prices to ensure your cash flows grow right along with it. You're not just holding your ground, you're actually being pushed forward. It's one of the few places where you can genuinely feel good about the long-term effects of a weakening dollar. The market loves activity. It rewards drama and quick turns and the illusion of control. But the big money isn't made in the buying and the selling. It's made in the waiting. It's the quiet compounding of value in a wonderful business that you leave alone to do what it does best. A ham sandwich could run a toll bridge. The constant temptation is to do something, to react to a headline or a dip in the price. But the best strategy is often to just sit on your hands. The key is to make a few good decisions and then have the discipline to avoid undoing them. Time is the friend of the wonderful business and the enemy of the mediocre one. This entire approach is about harnessing the power of American industry over the long term. It's a bet that the country will be moving more goods, not less, in 10 or 20 years. It's a belief in the fundamental resilience and growth of the system. You're not trading stocks. You're allocating capital to productive assets. There's a profound difference between being a speculator, betting on the price of a stock, and being an investor, owning a piece of a business. One is a game of fleeting opinions, the other is the engine of capitalism. The speculator worries about the next quote. The owner thinks about the next decade. It's a much calmer and far more profitable way to operate. Well, there you have it. It's not a complicated formula, but it requires a temperament that's in short supply. It requires you to be greedy when others are fearful, and fearful when others are greedy. But most of all, it requires you to be patient when others are impatient. The stock market is designed to transfer money from the active to the patient. It's that simple. Every ticker tape, every flashing price, every frantic news alert is a siren's call to action. But the most successful actions are often the ones you don't take. We're not in the business of betting on which mouse gets the cheese the fastest. We're in the business of owning the maze, and a good maze, a well-constructed one with high walls and only one entrance, becomes more valuable the more mice that want to run through it. The beauty of this approach is its simplicity. You find a business that is essential, that has a durable competitive advantage, and that is run by able and honest managers. Then you buy a piece of it at a sensible price. The hard part isn't the arithmetic, it's the emotional discipline. You have to be willing to look foolish in the short term. You have to be willing to sit quietly while others are piling into the latest fad and bragging about their quick profits. Your validation doesn't come from a quarterly statement. It comes from the inexorable growth of intrinsic value over years and decades. The world will always be lured by the new thing. There will always be someone pitching a story that sounds more exciting than a railroad or an insurance company. But stories are cheap. Durable cash flows are priceless. True investing is about recognizing that a wonderful business is a sovereign nation. It prints its own currency. defends its own borders, and its value compounds on itself, independent of the daily votes of the stock market. The market is there to serve you, not to instruct you. The noise will never stop. The commentators will always have an opinion. The economy will have its ups and downs, but a truly great business sails through these squalls like an aircraft carrier, barely noticing the waves that would swamp a smaller boat. Your job is not to predict the storm. Your job is to build a boat that can weather any storm. And the best boats are built not for speed, but for endurance. They are built with the strongest materials, with the deepest keels, and they are captained by those who think about the journey, not the next port. The temptation to trade, to time, to tweak, is the investor's greatest enemy. It's the sand that grates in the gears of the compounding machine. Every time you interrupt the process, you are starting the clock over again. You are killing the magic of compound interest, which Einstein reportedly called the eighth wonder of the world. We don't have to be smart about many things. We just have to be smart about a few things, and then have the wisdom to stay within our circle of competence. The size of the circle matters less than knowing exactly where the perimeter is drawn. The future is never clear. If you wait for the fog to lift entirely, you'll never leave the dock. You have to make decisions based on what you can reasonably know about a business's long-term prospects, not on what you guess might happen in the next 3 months. A good decision doesn't always lead to an immediate good outcome, and a foolish decision can sometimes lead to a lucky profit. But over time, the logic of the decision and the quality of the business will assert themselves. The weighing machine of the long term eventually overtakes the voting machine of the short term. The best investment you will ever make is in yourself, in your own reasoning, in your own temperament, in your ability to read, to think, and to ignore the crowd. No one can take that away from you, and it compounds without paying any taxes. So for 2025 and for every year after that, my advice remains the same. Look for the toll bridges. Look for the businesses that are impossible to replicate. Look for the ones that get stronger with inflation. Buy them at a sensible price. Then do the hardest thing of all. Do nothing. Just wait. Let the management team do their job. Let the business work for you. Let the powerful force of compounding do its heavy lifting. Own a piece of America's backbone. Own a piece of its future, not because it's exciting, but because it's inevitable. Bet on certainty, not on mystery. The ride won't be smooth every day. The price will fluctuate. Sometimes it will be down significantly for reasons that make no sense. View those moments not as warnings, but as opportunities. A dropping price for a wonderful business is a gift to the true investor. In the end, you don't need a lot of brilliant moves in a lifetime. You just need to avoid the big mistakes and make a few very good decisions that you hold onto for a very, very long time. So be patient, be rational, and be rich.